PayPal, Celsius, Shopify, these stocks going to keep going. Then we'll get into my possible buys watch list here. Well, Shopify got big news out here today. So you might have seen it. Etsy popped 16% as OpenAI announces ChatGPT instant checkout for the shopping site. OpenAI announced instant checkout, a new feature that will allow users to make single item purchases directly from merchants through ChatGPT. Instant checkout initially supports single item purchases from US Etsy sellers, and more than 1 million Shopify merchants are coming soon. The feature is available to US ChatGPT Plus, Pro, and free users. So it's a big deal, right? At the end of the day, we know ChatGPT is very popular. We know people are using it for a lot of different things, and we know it's very important that OpenAI makes a lot of money from either ads they're going to serve you up or from purchases, right? Like at the end of the day, that's how they're actually going to make their big money. People think, oh, they're going to make their big money from subscriptions. No. There's not enough money in that. I mean, there's money in subscriptions, but for a company OpenAI size, for the sort of money they're spending, you've got to fund that through advertisements and commerce. There's just no other way around it. Otherwise, like there's not enough people are willing to pay $20 or $30 a month or whatever that is for a Plus subscription. Ask Meta, ask Google, ask anybody that's successful. So you absolutely need ads and you need commerce. And so that's what's going to happen for the next several years. And that's a huge opportunity for Shopify, certainly, right? Now, this is also a big opportunity for Google. So if there's any Google shareholders out there, just understand anything that ChatGPT is doing, Google's going to be integrating that just as well, right? And so when you look, Gemini, which is Google's ChatGPT basically, right? That's number 2 here today on free iPad apps. And then if we look at free iPhone apps, guess what's number 1 in the United States of America? Google Gemini, ahead of ChatGPT. So it's very bullish for Google. Understand any way ChatGPT is going to make money off this, Google's going to make money as well, right? And we still don't know who's going to be the winner here. I mean, a lot of people have thought, oh, ChatGPT's got this easy. Now they're starting to see these numbers as far as what Google's putting up, and now people are like, I don't know. Like, I really don't know if ChatGPT is going to be the winner chicken dinner like we all think. So, the runaway favorite, it could be Gemini ends up coming and beating ChatGPT long term. We'll see what happens there, right? Now, as far as Shopify goes, listen, man, I own this stock in the Patreon portfolio. It's been a tremendous performer for me, up 125%. I have no ambition to sell those shares of Shopify. Like, Shopify feels like one of those companies, and if you run the numbers and projections, like they have a chance that at some point in the 2030s, they could be $1 trillion company, right? They got to keep putting up these 20 to 30% revenue growth numbers with the bottom line outpacing. And you run those over the next 10 years and you'll get to a very, obviously Shopify will still be able to, command a very high PE at that particular time, like high PE relative to the market, not relative to itself right now. But yeah, like that company just has an extraordinary opportunity. So I have no ambition to sell those shares in the Patreon portfolio, right? By the way, if you're looking to follow my moves in the Patreon portfolio, I always have that linked in the description area as well down there. You can always join me in there. As of right now, I have 5 stocks. Remember, this portfolio just started in 2023. I already have 5 stocks that I'm up over 100% on. Elf, Shopify, Fubo, SoFi, and then Palantir at a shocking 2,169% gain. Insane, right? So imagine how many stocks I'll have in that portfolio 3 years from now, 5 years from now, 7 years from now that will have made me over a double, right? Imagine how many 10x stocks. Like, it's going to be incredible, right? Now, in terms of Celsius stock, listen, I spoke about Celsius stock on a video I put out 4 days ago. 5 ultra high growth stocks to buy. I put out that video 5 days ago. Celsius was one of those 5 stocks I spoke about in that video. Celsius is going to keep running for a long time. Like, obviously, I'll have pullbacks here and there, but at the end of the day, like, Celsius has a massive runway of growth. People will continue to run into Celsius stock. You know why? Because they've got the massive growth rates. The shorter growth rates Celsius will be putting up for this next many quarters is, what people dream about. And so people will continue to flood to that stock and flood to that stock and flood to that stock because of the massive growth rates. And then they'll be thinking about 2027, 2028 margin opportunities and EPS expansion opportunities and et cetera, et cetera. So Celsius is just, that one's going to continue to move and groove. PayPal. What's going on with PayPal? I made $19,000 on this stock so far in the public count. I did take some profits on it a while back. The stock's dirt cheap. It has a forward P of 12-ish. Could the stock continue to run? Sure. but it just needs people to like, they've got to show better growth rates. That's all I'll say about PayPal. They've got to show better growth rates. If this company can show 7% revenue growth, people will come flooding the stock, because then they'll be looking at it and they're like, oh, 12 forward P, 7% revenue growth, count me in. Count me in. They got to come through with something better than 5% revenue growth. If they can do that, the world is theirs, right? But people are just unconfident to PayPal, so it makes a move like today, 3.5%, but then people just become not as confident, and then, it's a little struggle. But I got to say, things like ChatGPT getting more serious about monetizing their user base is very bullish for companies like PayPal, companies like Shopify, companies like Etsy. They're going to make a lot of money from that over time, right? And we'll see. An Amazon truck just passed me right now, an Amazon Prime truck. We'll see if ChatGPT eventually gets Amazon involved. I wouldn't be surprised. I don't know. We'll see. We'll see what happens with that, right? But yeah. So anyways, PayPal, it's dirt cheap stock. Like, they just got to show better growth. If they can show better growth, like you'll see PayPal go $100, $120 fast, but got to show that better growth rates, okay?
How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses, as well as the ability to have access to my 6 and 7 figure plus Discord community, where we're constantly keeping in touch with each other, talking about what's going on in the market? How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area.
Alrighty, guys. So Nike, right off the bat here. Okay, so stocks up 4% or so after hours. I'd rather have the stock stay lower in the short term, because my position's almost fully built in Nike, but I would love to just add a little bit more, just a little bit more. And so, I'm happy it's not up 10% or 15% or something like that, right? Now, in regards to numbers, they're way ahead of schedule, essentially. Earnings per share came in at 49 cents, 27 cents was expected. That was a beat by 81%. And then if we look at revenue, they came in with $11.7 billion of revenue versus $10.9 billion was expected. So that was a beat by 7% there. So really good results out of Nike, and kind of a surprising one, because a lot of people were not expecting that. They were expecting revenue to be down quite a bit. So to actually eke out revenue growth definitely shows that Nike's ahead of schedule in regards to this, right? Now, I posted this on X. If you ever want to follow me on X, it's always linked in the description area of all my videos. But I posted this, and I think it's important. I said, Nike turnaround is ahead of schedule. Double beats, and huge at that, right? Huge double beats. Some of the most impressive beats this entire earnings season. Elliott Hill is doing a great job turning things around. Bravo, right? He's ahead of schedule. He's definitely ahead of schedule in regards to his turnaround here with Nike. Now, in regards to Nike's numbers, revenue grew. It was expected to go down quite a bit, and so the fact that they grew revenue was kind of shocking. Now, cost of sales was up for the company. They're getting hit by tariffs and all that drama that's going on out there, so gross profit definitely got hit in the quarter, 6 percentage points. Now, selling general administrative expenses, they actually dropped that 1 percentage point. So as a percent of revenue, that actually fell a little bit for the company. But because gross profit was down 6%, that's going to kill your net income, right? So they came in with $727 million in net income versus a little over $1 billion in net income, right? So, the biggest point I've been making for Nike in regards to this year is this is Nike's worst you're going to see Nike in regards to their financial results. The numbers you've seen over the last few quarters, and in a quarter like this is as bad as it gets for Nike. And think about this for a moment. As bad as it gets for Nike, and they just did $727 million of net income. That's when you know you got a very special company. When they're going through bad times, multi-year bad times, and they still make $727 million during a turnaround, that's insane, right? So that was that. Now, as far as their balance sheet goes, they're sitting on $7 billion plus of cash and cash equivalents, $1.5 billion plus of short-term investments, and $7.9 billion of long-term debt on the company. As far as what is actually going on as far as strength and weakness, North America actually was up 4% revenues for the company, which is pretty good. Like, it shows North America is really starting to turn for Nike in a major way. Their business is inflecting positive. That's great. Europe, Middle East, and Africa, slow, but that's inflecting positive as well. 1% revenue growth. China is still a big issue for the company, right? China revenues were down 10% in the quarter, so they've got a lot of work to do, certainly in China. Asia Pacific and Latin America revenues were up 1% there. So North America, Europe, Middle East, Africa, and Asia Pacific and Latin America are all headed in the right direction, which is what we want to see. If you're somebody that wants to buy Nike stock, you already bought Nike stock, you want to see those businesses moving in the right direction. The last big dog we got to pull over to get them in the right direction is China. So if we can pull China in, then we're really talking. So basically what Nike needs to now focus on for the next 1 to 2 years is accelerating the revenue growth in North America, Europe, Asia, Latin America, and then getting the China business from stop being a drag on the business where revenues go down 10% to start inflecting positive, right? So things are headed in the right direction, but China is definitely where you got a lot of work here to do in regards to this company, right? As far as running, the running segment sounded like it was very strong for Nike overall, so this is phenomenal. By the way, I posted all these screenshots if you're wondering what this is. This is my private stock group's Discord chat with the 6, 7, and 8-figure members. We have over 1,000 members in there that have either 6, 7, or 8 figures in their portfolios. If you want to join us in there, that will be the pinned comment down there. You also get access to all my course curriculums. You get access to 1000xstocks.com, my premium investing software, access to see the stocks I'm buying and selling each week, all that good stuff. Okay, that is the pinned comment down there. Okay, now as far as some big things that happened on the conference call, there were some very impactful things that happened on the conference call. Okay, so one is, this is very important, Elliot Hill says we still got a lot of work to do. CFO said the same exact thing. I love it. Because, they're not resting on like, oh, we got revenues back to inflect positive. They're like, we got a lot of work still here ahead of us, right? They're charging ahead. They understand they got to get China back positive. They understand they want to accelerate revenue growth in North America and Europe, right? So I like that frame of thought of like, we're not being complacent about where we're at right now. We've got a lot of work to do. I'm sure they want to get back to double-digit growth, revenue, right? I'm sure they want to get there. And if you're going to get there, there's a big difference between 1% revenue growth and 10% or 12% or something like that, right? They said so a Nike Skims launch just happened here in the past week or two, essentially. And Elliot Hill said that launch was very strong. Demand was very strong, was his word choice for Nike Skims. So that's good. He also said they just launched back on Amazon, which I think is a great thing. Like, dude, who doesn't shop on Amazon? Like, you gotta be on Amazon, right? So Nike has a new store on Amazon. They said basically things are much stronger. Business and interaction activity is much stronger than they had anticipated, which is exactly what I want to hear in regards to that, right? Amazon, I mean, that needs to be a strong platform for Nike. Nike got too greedy back in the day when, once again, Mr. Consultant was running the business, and they thought, oh, we're too good to have, have Amazon make money off us. Dude, you got to be in places that people are. Like, everybody shops on Amazon. Doesn't matter if you're a lower income household or whether you're, rich. Everybody shops on Amazon. So if you're somebody like Nike that sells to lower income folks, middle class folks, and wealthy folks, you better be on Amazon. Everybody shops on Amazon, right? And so I love that they're back on Amazon, and I'm sure that business is going to build substantially over the next several years, and that's going to be a big tailwind for them, their Amazon relationship. Basically, Converse, that's been a huge weak spot of the business. They said that Elliot Hill replaced the management team at Converse, so they got a whole new leadership team for Converse moving forward. So I'm sure the Converse business will start to get its act together in 26 and beyond, right? They talked about the Win Now strategy, which is their big strategy they have going on. And he says, it's working. It's proof in the numbers. They're ahead of schedule here. And it's the right way to go. And I agree with that. They talked about tariff impact of about $1.5 billion, if I recall, for fiscal year 2026. They're already in their fiscal year 2026, just so you're aware. That's different than calendar year 2026. So obviously tariffs are impacting their profitability. With that being said, they still make fortunes of money, right? And they still have an ability to get that gross profit back positive, even with the whole tariff drama. But there's no doubt, like, the Trump tariffs is basically a massive tax on companies like Nike and anybody else that does business, where you make a product in another country and then you got to ship it to the United States, right? There's no doubt. It hurts. It's basically just a big tax, right? And Nike has to pay that tax straight to the U.S. government. And so it is what it is, right? And do I see that being change? I don't know. Like if the government maybe overrules or something, maybe that changes something. But is Nike going to suddenly start making all their shoes and socks and underwear and everything else they sell, and shorts and hats all in the United States of America? Very low probability of that, right? Very low probability of that. So, that just is what it is. They're going to have to deal with the tariffs until they don't, and it just is what it is. But once you get used to that tariff impact, like at the end of the day, Nike long-term will pass that on to the consumer, and the consumer will pay that tax, right? But that's more of a longer-term thing. Nike's focused on the turnaround, getting the revenues right, everything like that. When they're in more of a position of power, they can worry about offsetting that elsewhere, and then that $1.5 billion a year will just come right back to Nike, essentially, and will be hit that bottom line, in my opinion, right? Which is phenomenal. So, yeah, overall, I was definitely very encouraged by the numbers Nike reported. They're ahead of schedule in the turnaround. The conference call was very good. Very encouraged with the job Elliott Hill's doing at turning around the company. And where's Nike stock headed from here? Here's the deal, okay? Listen. Nike stock is not out of the woods this year. What do I mean by that? A lot of people are expecting Nike stock to go to $90, $100 before we even get to 2026. I'm not in that camp. And the reason being is Nike stock has definitely been a stock that's had a harder year, right? The stock's down technically on this year, right? So it is one that if fund managers are looking to offset some gains with, they could sell here in the fourth quarter, right? We're about to go into the fourth quarter of the year. So that could put a lid on Nike stock, even though the turnaround's ahead of schedule, even though everything's going great as far as that goes, right? A lot of positive momentum. At the end of the day, like if these fund managers need something to sell to offset gains because they don't want to pay taxes, and same thing with retail investors or whatever, traders, right? They'll look to sell a stock like Nike that's down for the year, right? Or maybe they bought it 2 years ago and they're down big on it. That could be as well, right? And so they got a big loss there, and you made a big gain on some Mag 7 stock. Boom, you go ahead and offset that, right? And so that puts selling pressure on the stock. So I think if Nike had already had a good year as far as stock price goes, I would say, yeah, the stock's probably on its way to $90 or $100 this year before we even get to year end, being that they're way ahead of schedule. But since the stock has lagged this year and people are going to be looking for some places to offset gains against, I think that puts a bit of a lid on the stock. So I'm not expecting Nike to go $90 or $100. Like, all things are possible. I just don't think so. Next year, I think so. Like, I wouldn't be surprised at all if Nike's a $90 or $100 plus stock next year. This year, I think it's tough to get there because that tax loss harvesting that I'm sure will come into Nike, right? Now, as far as some of these other stocks, and by the way, as a long-term investor in Nike and somebody that wants to continue to buy shares, like, I welcome the weakness short-term. Like, if somebody wants to sell me their shares at $70 or whatever, I'll gladly take those off their hands because I think Nike's going to be a whole lot more than $70 a few years from now, right? Now, as far as some other stocks out there, definitely some positive momentum in stocks like Celsius today. Elf Beauty as well, right? AMD. Those stocks continue to show strength on strength on strength, especially a stock like Celsius, right? And if you guys haven't got to see this video yet, definitely check this one out. 5 ultra high growth stocks to buy. You're going to want to check out that video, man. I talk about 5 stocks in that video, and I think I even give a honorable mention to another stock that there's some big opportunities. So make sure you guys check out that video on the main channel, Financial Education, okay?
How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses, as well as the ability to have access to my 6 and 7 figure plus Discord community where we're constantly keeping in touch with each other, talking about what's going on in the market? How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area.
So, right off the bat here, okay, let me give some advice to everybody, whether you got a little money in your portfolio, whether you got a big dog portfolio, because I need to prepare everybody for what's coming in this market, some activity I'm seeing, okay? Listen. This is a sort of activity I'm seeing out there, right? This individual says Tesla stock's going to 4,300 by 2030, okay? Then we had some news like this come out here today. White House has issued warning and directs federal agencies to brace for mass employee firings. And people are like, oh, this means the crash is here. Like the whole economy is doomed. The whole market's going to crash now. All these sorts of things, right? And it's just so dramatic. It's just so dramatic. Like people are just so dramatic and so ridiculous. And the problem is, in the stock market, you've got to, if you want to really succeed in the stock market over the long term, and when I say the long term, I mean over a 20, 30, 40 year span, and you want to really build massive wealth in the stock market, here's what you actually form your opinions on. Math. I know, not the sexiest subject, and I didn't like math in school either, but at the end of the day, it all comes back down to math. You cannot just throw opinions out based upon randomness. Somebody's saying Tesla stock's going to $4,300 by 2030. They're not making that judgment based upon math. Somebody says, oh, the stock market is going to crash 50%. Are they making that judgment based on math, or are they just throwing something out there? You could say, let me tell you how to actually look at this, okay? If you want to know where Tesla stock's headed over the next 4, 5, 6 years, run your numbers. What's revenue growth going to likely go up, and why is it going to go up that much or down? What's the net income going to likely do? What is a fair PE ratio for stock growing at that sort of category? And that's how you got to make your justification. And under no circumstance, regardless of what happens between now and 2030, like Tesla's not a $4,300 stock. On the flip side, you want to say the stock market needs to crash 50% right now. What are you basing that on? We're at a forward P right now of 23 on the stock market, right? The S&P 500. We have the biggest, strongest companies in that index growing at double-digit clips, top line and bottom line. So what is a fair forward PE? Is a fair forward PE really 12.5? When the most dominant companies that matter the most to the index are growing at double-digit, top line, bottom line? That doesn't happen. That never happens. Point me out companies that grow double-digit revenue and net income year in and year out, earnings per share year in and year out, and trade at a 12.5 P. You're not going to be able to because it doesn't exist. The only companies that trade at 12.5 P or 12 P or 11 P or whatever you think the market should be at, forward P, you know what type of companies trade there? Ones that have revenues in decline or having trouble even growing their business and have a lot of questions about if they'll even be around 3 years, 5 years, 7 years from now. So to say 50% crash, it's just, you're just completely just throwing stuff out there. And this is the issue we have in this market right now. And I don't want you guys to get caught up into this thought process because it's just so extremist is the way I would put it. Kind of like the political sides are so extreme now. That's what I'm talking about with the stock market. People are just ridiculous. They're just like fanboying to one side or the other, the bearish side, the bullish side. There's no let's actually run projections here. Let's actually think about the math. What would make sense in this situation? There's not a lot of intelligent discourse out there right now. It's just ridiculousness. And I think it's a lot of ridiculousness because the market's been pretty ridiculous the last few years. From the Rona crash to then all the stimulus money and the stock market goes booming to then a 2022 crash and everything that happened there to then the unbelievable bounce back in the stock market over the past really 3 years now at this point in time. It's just ridiculous. And so sometimes you got to understand that, listen, patience can pay. Patience can pay. You don't have to get into this mentality of every stock's going to 10x. This stock 10x is going to 10x. Oh, it's going to 10x the next 5 years. The market's going to crash 50%. You don't have to get into that mentality. You can look at it. You can say, hey, you know what? Market's trading at a forward P of 23. I think it deserves to be at a 20. I think we got 15% downside in the S&P 500 or whatever, right? Okay, that's a math decision. You say, okay, I think the stock's going to give me a compound annual growth rate of 15% per year over the next 5 years. Okay, how are you getting there? Math. The revenues are going here, the net income's going here, the net income margin's going here, the PE ratio that's fair for a company that's growing at these sorts of rates in this sort of space. Boom. That's how you do it intelligently. And that's how you actually have confidence. Otherwise, you're not gonna have any confidence. There's no confidence, it's just ridiculousness, right? It would be like me saying the Las Vegas Raiders are going undefeated this season. Okay, could say that, but it's just a stupid thing to say. It's just ridiculous. Okay, it's not based on any logic. It's just like, oh, I'm emotional. And so when I see people, say all these different things, like I'm like, oh my gosh, it's so sad. They're just emotional wrecks. They don't understand math. And I'm like, in order to be successful over the long term in the market, you better understand math. You don't understand math, you're going to be in a lot of trouble in this game. The way I would put it to you is kind of like this, right? This is how people are a lot of times in the stock market. Like they're just all over the place, right? Like if it's a scale, it's like way on one side or the other side. Okay, they're so either over the top bullish or so over the top bearish. It's just ridiculous, right? This is how you want to be in the stock market over time. Even keel. Okay, everybody wants to go risk on, the market's just climbing year after year after year, right? And the valuation's looking rich. Okay, be even keel. Look at it from a standpoint of, okay, market's probably a little bit ahead of itself, and, there might be a price to pay for that in the next bit of time, and that's fine. On a perspective of like everybody panicking, selling their stocks left and right, take a standpoint of like, yeah, this is bad right now. There's a lot of fear out there, but you know what? I'm going to take advantage. I'm going to choose to be bullish over the long term, and I'm going to buy stocks because I think this stock's a deal, this stock's a deal. And how do you know that stock's a deal? Is it because it went down 50%, 20%, 30%, 60%? No, that's not how you know it's a deal. You know how you know it's a deal? Math. You got to go back to the math and say, okay, revenue can probably go up this much per year under a bull case assumption, under a base case assumption, under a bear case. Boom, run all your numbers. And then you begin to understand, okay, this stock's a great deal, or you know what, this is a ripoff. That's how you play this game. Don't be an emotional mess in this game. Otherwise, you'll end up with emotional returns. And emotional returns are not good returns. They're not good returns. And so keep that in mind, folks. Be even keel in this game, and you're going to likely end up doing very, very well for yourself over the years. And you'll make a ton of money in the bull markets, and in the bear markets, you're not going to go under, which is half the battle. Like people forget, when you've been in a bull market, remember, we've been in a bull market now for basically 3 years, right? Obviously, we've had corrections along the road and pullbacks, things like that. But really, we're in a 3-year bull market now, okay? When you've been in a 3-year bull market, people forget about the bear markets. They forget bear markets exist. A market where, downtrends for 6 to 18 months straight. And every time you think it's coming back, it just ends up going lower. People forget about that. No different than when you've been in a bear market for a while. People start forgetting about the bull markets and how unbelievably powerful the bull markets are. Bull markets, by the way, are way more powerful mathematically than bear markets. People romanticize the bear markets. Oh, the great financial crisis. The indexes fell 50%. The Rona crash. Oh my gosh, S&P 500 went down like 34%, like in a snap of fingers, blah, blah, blah. They romanticize these time periods. What happened in 2022, right? The Great Depression, like they romanticize these time periods. But what they forget always is mathematically, the bull markets are so much more powerful. Like it's not even remotely close. Like you could see a chart looking at bear markets and how powerful they are versus a bull market, it's not even in the same stratosphere. It's ridiculous. And so, because a bull market is like a never-ending tidal wave that just, I shouldn't say never-ending, but it's a tidal wave that just continues to dump ocean water on you again and again and again, year after year after year. Whereas a bear market is like one big wave that might hit you, and then that's it. Okay? So, because bear markets usually last 6 to 18 months. And yeah, it's not fun to go through in the short term, but at the end of the day, like it's the best buying opportunities you get usually for the next 10, 20 years. Look at the great financial crisis, right? Like about as brutal of a bear market crash you could get. All the indexes went down 50% plus, right? Brutal. It was the best buying opportunity we've seen in stocks in the last, you have to go back all the way to the 1980s. To see a buying opportunity that phenomenal. It was unbelievable, right? So be even in this game, guys. And you're gonna go pretty far for yourself, okay?